Airbnb survived COVID, and now they're about to go public in one of the most hotly anticipated IPOs of the year. On Sunday, they actually raised their valuation to $39 to $42 billion, boosting their IPO price range to between $56 and $60 a share. Can they thrive past their IPO? My name is Humphrey. Welcome back to my channel where we talk about personal finance and investing, and today we're talking about Airbnb's IPO. Also, only a small percentage of people who watch my videos are actually subscribed, so if you end up enjoying this video, consider subscribing. It's free and you can always change your mind. Okay, so I've personally used Airbnb. I've tried some of their experiences that they offer, and I personally know a ton of friends that have used Airbnb in the past 6 months. I feel like with anyone you know, if you talk to them, most of them have probably used Airbnb or have encountered their service in the past. But does that actually mean we should buy their stock at the IPO? Well, that's what we're gonna go over today. First, I'm gonna give you a quick overview on how the Airbnb business works. Second, we're gonna go over how they did during COVID and also their financials. Third, we'll go over their future outlook and their risk factors. And lastly, I'm gonna cover if I'm gonna buy this stock at the IPO and at what price I'm comfortable buying it at. So let's get right into it. Let's talk about how the Airbnb business model works. For those of you that don't know, Airbnb is a network that connects people with extra rooms or extra rental properties to guests that are looking for a vacation or travel lodging. So instead of booking a traditional hotel, a guest can book an Airbnb, and how Airbnb works is that they take a commission from every booking stay. Airbnb doesn't actually own any of the properties in this case, so they're merely serving as a network platform. During the COVID-19 pandemic, obviously Airbnb's business was hit super hard since nobody was traveling, and one of the metrics that we really want to pay attention to, especially in the next section, is something called gross booking value. Gross booking value, or GBV as is abbreviated, is basically the total amount of bookings in dollars that Airbnb has in a single month or single year. It's a really good indicator of the health of the company and how things are trending in terms of how many bookings are being made. Okay, so let's talk about how they did during COVID and how their financials actually looked prior to COVID as well. In March of 2020, their gross booking value was down 127% compared to the same period in the previous year. But as you can see, the trend continued to recover throughout the next 6 months. In September 2020, their gross booking values year over year were down 17%, which is not bad considering the global pandemic at hand. Another resilient bright spot of Airbnb during COVID is that while their revenue went from 3.69 to 2.51 billion, or a 32% drop, they actually cut their sales and marketing expenses 54%, mostly suspending all discretionary spend. So during COVID, they basically cut their marketing dollars in half, and their revenue didn't suffer proportionally. In fact, it suffered disproportionately, which is actually good. It means that Airbnb is a lot more resilient than we think, and a lot of organic search probably went on during COVID to keep their business afloat. It also shows me that their brand value carries a lot of weight and momentum in that hospitality space. Their revenue figures from 2017 to 2019 are impressive. These are in the thousands, but as you can see, in 2017, their revenue was 2.5 billion, then 3.6 billion, then 4.8 billion for 2019, clearly growing a lot year over year. In 2017 to 2019, we can see that their nights and experiences booked grew at a rapid pace from 185 million a year in 2017 to 326.9 million a year in 2019. What's crazy is that their gross booking value was 20.9 billion in 2017, 29.4 billion in 2018, and then 37.9 billion in 2019. Now, we need to remember that's just gross booking value, so Airbnb's actual revenue is just a percentage of that, which is the commission they take from every booking. So as of 2019, they were still growing. Although their growth rate slowed a little bit, they were still growing, and I believe that's due to the market at hand. According to their own S1 filing, they actually say here that we estimate our total addressable market, TAM, to be 3.4 trillion, including 1.8 trillion for short-term stays, 210 billion for long-term stays, and 1.4 trillion for experiences. Now, this was a bit shocking to me, but according to them, these numbers correspond to their gross booking value on which they collect fees that are recognized as their revenue. So right now, if they do $30 to $40 billion in gross booking value per year, they're basically saying that their total addressable market is 100 times that. Now, I really don't know how accurate that is. It's really hard for me to cross-reference what their actual TAM is, but even if their actual TAM is, let's say, 1/10 of what they estimate, that means they still have a lot of room to grow, which is pretty crazy. So those were their financials. Now let's go over their future outlook, why you might like Airbnb, and some of their risk factors that we need to be aware of. So first of all, Airbnb is a marketplace, which is a network effects business. They really take advantage of having a network. So other network businesses are, let's say, Uber. They connect riders and drivers. Instagram, Facebook, Google can even be a network business with their search engine. If you're the first to market in a marketplace or network type business, you're usually the leader of that business because it creates a natural monopoly. You tend to become the only network because there's not really a great substitute for your network. Usually people just go towards the leading network, so in this case, Airbnb. I think Naval Ravikant summed it up really well in one of his podcasts on network effects businesses. He was using the example of 10 people that spoke 10 different languages. So let's say you do have 10 people that speak 10 different languages, but one of them is English. Now, when the 11th person comes along and they choose a language, let's say they choose English, then all of a sudden 2 out of the 11 people are speaking English at this point. Now, after that happens, if the 12th person comes along, what language do you think they're going to choose? Most likely they're going to choose English because now all of a sudden they can speak to 2 people rather than just 1 person at a time, because now English is the most dominating language. So in a networks effects business, the winner usually takes all, and then if that happens, it becomes a natural monopoly. With Airbnb, there's literally no direct competitor to Airbnb. Sure, you have things like VRBO, which offers, private residences for rent, but Airbnb offers an experience unlike any other, which is that you can share rooms and actually share experiences with different hosts across the world. Similarly, if you want to stay in one of those crazy, unique, one-of-a-kind houses that are listed only on Airbnb, well, there's no really other place for that besides Airbnb. Airbnb also just has simply way more listings than any other website, which will make it a natural option for many travelers. Now let's quickly talk about their international expansion opportunities, because I think that is a big opportunity for Airbnb. Their gross booking values in the first 9 months of 2020 were broken down in the following ways. North America, 54%. EMEA, which is Europe, the Middle East, and Africa, made up 31% of their gross booking value. Asia was 9%, and Latin America was 6%. Right now, less than half of their gross bookings are actually coming from the international sources, but as we see Airbnb become a bigger force throughout the world, we could actually see that segment of their revenue growing quite a lot. The last thing I want to bring up about the future outlook is I don't think travel is going anywhere as an industry. Humans have always wanted to travel. It's somewhat built into our DNA, and I don't think traveling is a trend. Not even a pandemic will stop us from traveling, so I think that when the pandemic actually ends, we're going to see a rebound in the travel industry as a whole. And that rebound is certainly going to benefit Airbnb in the long term. All right, now let's talk about some of the risk factors, because Airbnb isn't all roses and cookies, although a good chocolate chip cookie sounds really good right now. Anyway, yes, risk factors. So number 1, regulation is a big concern. Even though Airbnb doesn't rely on just a few top cities for all of their revenue, according to their filing, approximately 70% of the company's 200 largest cities on a revenue basis had introduced some sort of regulation on short-term rentals. For example, in London, the maximum number of nights you can legally offer as a host is 90 nights per year, and in Paris, it's 120 nights per year. So this is a big challenge for Airbnb. No matter what city they're going to go into, they're going to have to battle the local municipalities or local regions on basically what their laws and regulations are for short-term rentals. The second risk factor is that they've incurred a loss every single year since inception, and they may not be able to reach profitability. They point to significant investments in their existing business as the reason for that, and also COVID-19 adversely affecting their business. Again, this seems to be becoming the standard for a lot of these huge tech IPOs, especially the network effects businesses, and Airbnb is no exception. So much of the trading around the Airbnb stock is going to be about whether or not investors believe that Airbnb will be profitable at least one point in the future. A third risk factor that they list in their S1 filing themselves is that if they fail to add new hosts or their existing hosts start to decrease in quality, their business could be affected. So Airbnb is a supply and demand business, so if their supply side starts to suffer in terms of quality, maybe the demand side might go to a hotel instead of an Airbnb in the future, and that could adversely affect their business. But to be honest, I think that Airbnb is pretty good at maintaining their quality and their standards for their hosts, so I don't really anticipate this happening. Another risk factor that they list themselves is that their revenue growth is slowing, and they actually might expect it to slow more in the future. This one is more of a cautious disclosure on their part. If you actually look into the reasons that they list for their growth slowing, a lot of the risk factors they list are in their own control. For example, number 1, the level of consumer awareness and perception of our brand, they can control that. Or Our ability to build and strengthen trust and safety on our platform and among members of our community, that's something they can control as well. The level of spending on brand and performance marketing to attract hosts and guests to our platform. Now, the spending is in their control. You could argue that the performance of the marketing is not within their control, which I can totally understand. The factors they list that are not in their control are also not in control for other businesses either. So things like economic downturns and COVID-19, etc. Again, they list regulatory issues here, but as we already said earlier, that is a risk factor we've covered. For competition, I like how they listed this here, but I still think they're a natural monopoly. It's almost like Google listing Bing as a competition. Is that really a competition? No, it's more just like a smackdown. So I read through all their risks, and the only really big risks that I personally see are the ones that are not in Airbnb's control, or maybe if somehow one day their leadership starts to really suck and starts to make really poor moves and poor decisions within the market. Okay, with all this information presented today, am I going to buy this IPO, and what price is too high for this IPO? My short answer is yes, I'm probably going to buy this at the IPO because they've become the default travel option for millennials and Gen Z. They have unit economics that make sense so long as they can continue to grow their business and scale. And speaking of scale, I wouldn't be surprised if Airbnb is the subject of some sort of antitrust lawsuit maybe 5 or 10 years in the future. It seems like every tech business with a natural monopoly is starting to get this way. Another good thing about buying Airbnb at the IPO is that it could be a pretty good short-term play on the vaccine and the reopening of the economy. I've left about 10% of my portfolio in cash lately for investments like these where we're not too sure what's going to happen in the medium to short term. But since I'm a long-term value investor, I'm actually going to be holding Airbnb for the long term, so I'm very happy to actually buy some of Airbnb's IPO at the stock. As far as what price to pay, I think their valuation at $40 billion is somewhat on the high side. According to all the research I've done, a lot of the analysts are pricing their price targets between $65 and $75 a share using a price per share comparable analysis against similar companies like Booking.com. In actuality, it's really hard to value what their price per share should be because it's a business without any true comparable competition. But $65 to $75 per share using comparables against like Booking.com is probably what Wall Street is going to value it at on IPO day. Now, personally, I think there could be a snowflake effect on this IPO as well because it's so hotly anticipated and it might actually become a meme stock in the community. I could easily see it trading for over $90 or $100 per share on opening day, which wouldn't actually surprise me. I'd argue that if you're holding Airbnb for the long term like I am, which is going to be 5, 10, or 15 years, buying at the IPO price, as long as it's somewhat reasonable, can be a good play. Another option that you could do is just wait for a few months and see what the price settles at, and then you can decide whether or not you want to invest in it or not. All right, guys, thanks so much for watching. If you got any value out of this video, make sure to hit the like button, subscribe to my channel for more personal finance and investing content, and also tick the notification bell because then you'll get notified every time I drop a video. Feel free to follow me on Instagram. My handle there is Humphrey Talks. So if you're ever just bored scrolling your phone and you want to come see me, that's where I'll be. If you'd like 2 free stocks from WeBull valued up to $1,600 when you deposit $100, the link for that is in my description below. And lately they've had some crazy offers of 3 or 4 stocks when you deposit $100. Lastly, thank you to all my Patreon supporters. I appreciate you guys watching me all the time, and I'll see you guys here in another video in a couple days. All right, thanks, peace.